Hey everyone, I'm Jeremy Szafron, and this is Kitco News. As the AI-driven future reshapes industries, copper and other precious metal demand is soaring. And today's guest is at the heart of this transformation. He speaks to the miners every day. So let's check in to see how the sector's doing. Steve de Jong, CEO of VRIFY, is pioneering the way we explore and invest in mining with cutting-edge technology, and he joins us in the studio today. Steve, thanks for being on with us. Let's start by talking a little bit about where the mining sector was last year. It was a very difficult year for junior miners. Access to capital, we didn't see a ton of activity, a little bit of M&A, and then come into this year, we have all-time highs with gold. What's the sector been like with these new prices?
Well, looking back, it's almost like those of us who've been in the sector for enough years, it's almost like, if I think I'd say the last 10 years, it's like you get 3 months of beautiful time and then 9 3/4 of a year of absolute pain. Yeah. Last year was just another one of those years. Now, for me, it's an eternal optimist. I think you have to be in the sector, but seeing these commodity prices take off, you hear a lot of chatter about how come the equities aren't reacting to the commodity prices. Right. To me, that's the best environment in the world because that is your opportunity. It's when the equities are tracking the high commodity prices, that's sort of the upside is shrinking by the moment. Yeah. So right now, I think to me, it's the most exciting time. And like you're seeing all-time highs in the price of gold. You're watching the copper price run and everything else. I think back to prior to this, I was running a junior gold company, and the things we would have done for $1,500 gold. Yeah. And that wasn't that long ago. That's sort of 6-7 years ago. $1,200 gold was a norm. We're sitting here at $2,400 gold. I also think that as we start to see, assuming this metal price sticks around or goes higher, which I think it will, as you start to see all of this kick out in quarterly kind of production and revenue and everything else, that's when the rest of the world will really start waking up.
And is that when you think equity prices will kind of catch up to the prices in precious?
Depends. Equity prices, if you're talking about equity prices for majors, yes, and miners and producers and things like that. I think the equity prices for the explorers, I think they're tied, but there's not a perfect correlation. Yeah. I think that the catalyst for the juniors is going to be a little bit different.
Yeah. Talk to me a little bit about how high the cost of capital has been and what a struggle it's been for the junior miners. I mean, last year you could hardly raise anything unless you went to someone larger. This year might hopefully be a little bit different, but is it, the cost of capital is high. We have labor costs higher. It's been a struggle.
Yeah, I think that it is such a volatile sector, which works in your favor, works for you and against you. Right. If share prices go up, these are 90% of the funding that comes into the sector is through equity. So as share prices go up, cost of capital reduces. As the cost of capital reduces, the sector becomes more attractive. So then that in itself brings in more capital. Right. Share prices go up and you get into that sort of self-fulfilling prophecy almost. And I think we're starting to see that. If you look at even just the last 2-3 months, you've seen these share prices run. Yeah. And one of the other issues that I think have made it really hard for companies to raise money is there hasn't been much liquidity. And as share prices run, more interest comes in, volume starts ticking up, institutional money can now finally look at the sector. Liquidity for a public company is an asset in itself. So as their liquidity profiles increase, that also attracts more capital in. Yeah. The flip side of that is if you see sort of liquidity dry up and share prices fall, cost of capital go up, you get into that sort of death spiral that feels like we've been in almost like a 10-year death spiral that we're just kind of pulling our way out of. So I don't think I think it is very much the cost of capital to really drive the sector forward is just inherently tied to kind of the level of interest in the sector at any given time, given the primary funding mechanism that we tend to use is issuing shares.
Right. Well, let's talk a little bit about the retail audience looking over at mining again, specifically on the junior side, looking for these opportunities. If they were to go to the S&P and grab 20%, 30% swings, maybe Bitcoin, it seems they've been looking towards those directions. As these prices start to come up on the gold side and investors are starting to look at other opportunities, do you think that retail audience will slowly start coming back this year?
I think without a doubt. I think if you're retail or institutional, any type of investor, you're always looking like what is the best opportunity. Yeah. In the past, like if we dial back, say 2 years or so, you're looking at sort of the general markets continue to plow forward. So if I'm an investor and I'm completely agnostic, I don't have any sort of special attachment to commodities versus something else. If something's performing and something's not performing, I need a really good reason to risk something that's a known or something that's winning to invest in something that isn't now, but I'm essentially trying to call a bottom.
Yeah.
What we've seen now is we're in an environment where everything has continued to rise in those general markets. And if we look at some of the indices of they're really being held up by just a few big companies, whereas you have this complete detachment from commodity prices and the equity prices in our sector that didn't exist before.
Yeah.
So if I'm now as an outside investor, again, completely agnostic to what sector I'm looking in, that is the most attractive environment I could find myself in, because you'd think that one of two things is going to happen. Commodity prices are going to come back down and the equity prices are going to be in the right spot, or the equity prices are going to turn around and catch up with the commodity prices. I don't think the junior market and the commodity market in general, the equity side, is a leading indicator to the commodity price. I don't think it's that efficient of a market.
Right.
I think the commodity prices are what they are. And right now there's a play to be had in kind of getting into the equities. And as it starts to catch up to where the commodity prices sit.
Talk to me a little bit about the narrative that you're hearing, because again, you talk to these major producers and the juniors. When you start to look at permitting risks, for instance, Politico broke this story yesterday about Ambler Metals getting a road cut off in Alaska by Biden. We're at this crossroads, it seems, as though everyone understands we need more mines in operation and that it takes a long time to get there. But then these things happen. Is it a friendlier environment to be a miner right now?
Yeah, I don't know if, no. I guess in a lot of ways, I think it's difficult. I think if we look at it put a political lens on it, I personally think all of these decisions are made from a political lens, whether it's like when you think of permitting and so on, and I'll use the example of our own federal budget that just came out too. I think every decision within that is based on a place of what, if I allocate this money to here, what votes will that ultimately get me?
Right.
And I think that sort of most of the decisions that are made from permitting and kind of the example you gave and whether or not that's going to go forward is entirely based on what kind of votes and what allocation of votes and my model of what votes I need to get elected.
Yeah.
Unfortunately, right now, it seems like government bodies are often kind of speaking out of both sides of their mouth.
Yeah.
Like we need these resources. We need the jobs that come from these resources. We need the critical minerals from these mines to fuel the energy transition that we all believe and have built policy around. Mm-hmm. But at the same time, we're going to make it as difficult as possible to kind of get these things permitted and so on. Ultimately, I think it's, and I think politics often go that way. I think there's a bit of confusion and a lack of direction in what, where we actually need to end up.
Right.
I think it is, and personally, I think it's in everyone's best favor to find environmentally sustainable, responsible ways to permit these things as quickly as possible. Mm-hmm. I personally don't think time is necessarily correlated to the quality of the review process. It just seems to be this default. The longer it takes, it must be more thorough. And I don't think that's the case. And I think governments should really focus on how do we really responsibly accelerate the permitting process and ensure that the mines that the world needs, that our economy needs, that we need for the energy transition, get through that process as quickly as possible. And we need to detach it from like, this is automatically a 10-year period, because I don't think that's in anyone's benefit.
No, it almost seems as if they don't even know how long it's going to take to get into production, let alone permit, hire everyone, raise capital.
And going back to your question about cost of capital, if I'm an investor in something and I don't know how long it's going to take for you to get to that point, what's the point of being an investor?
Yeah.
So like investing, whether we like it or not, is what can you do for me now?
Mm-hmm.
And if I don't know that your mine is sort of 1 or 10 years away, I'll just wait till you know and can give me that answer, and then I'll come back and invest in it.
Yeah.
The problem is, if these are, for the most part, public companies, if you see that exodus of investment capital into your mine, what happens is your share price goes to zero or a very low price, your cost of capital goes through the roof. And then even just to maintain yourself through that permitting process becomes very difficult.
Right.
And it's one thing I don't think that governments specifically really have a full comprehension of sort of the knock-on effects of these decisions that they make. Yeah. It's sort of, if you create the perception that a jurisdiction is tough to permit in, the knock-on effect of that is you're essentially making it way more expensive and less likely that anything will actually take place in that environment.
Right. Okay. Well, I mean, supply and demand seem to be an issue for copper. I mean, we have a huge demand, a little bit of a supply problem maybe happening. We see, of course, Friedman talking about this all the time. I'm curious about technological advancements in mining and, this whole supply crunch. We're not where we need to be yet, but talk to me about the opportunity we have to get there.
So it's, one of the things we're doing, so I'm CEO of VRIFY Technology. One of the things we're doing at VRIFY is working along with clients and their data to see if are there opportunities within using technology to help identify areas that may have been missed for mineralization. And you've probably heard the narrative before in the sector. All the easy stuff has been found. We need to go to the far off corners of the earth or dig 3-4 kilometers deep in the earth to find the next wave of discoveries in minerals. I personally don't believe to that or ascribe to that. The company I ran before made a big high-grade gold discovery 2 kilometers from 2 of Canada's biggest mines, and a big part of that was just it was sitting under a swamp and wasn't. There was nothing at surface to look at. Right. The work that we're doing at VRIFY now and kind of really trying to harness that machine learning, artificial intelligence, primarily machine learning, to look at existing data sets to see if we can identify new things. In the first 2 months, our heads are exploding, and every time we see these results, in that kind of the amount of potential that we see just using existing data from the data that these companies already have, just taking a new technological lens and applying it to it is incredible. Yeah. So again, very much kind of drinking our own Kool-Aid here and bias. But I honestly think the next wave of discoveries are not going to be from crazy new technologies or geophysics or things like that. I think all those tools are great. I think we're vastly underestimating the value in the data that we already have today. And just by taking a new lens and looking at it, we're going to see so much. And from that, I do believe there's going to be a whole new wave of discoveries that are made and help kind of fuel that need for, or supply create that supply that there's going to be demand for, like copper and other things like that.
And how much of a demand for this technology is needed? I mean, you're talking to people every day on the street. People excited about this technology? They want it. They want to probably understand where these assets are.
You're in an environment, so people are always looking for. Imagine if you could take sort of your asset as it exists today, and without actually doing anything more or kind of drilling more or spending a bunch on a whole bunch of new expensive studies and so on, you could take it, process it, and say, like, actually, here's 2 or 3 opportunities that may have been overseen, and here's actually a geological technical reason why those are really exciting areas for mineralization.
Right.
In this environment, kind of, I would say the best way to describe it is we're drinking from the fire hose. Mm-hmm. And a big part of that is everyone's very conscious of their exploration budgets. Ultimately, what we need to keep exploring, though. If you as an exploration company, and even for the big producers, your exploration upside is still a big part of your valuation. That's the lever that's going to help kind of get you to the next level. The amount of demand we're seeing for that is, it's more than, I wouldn't say it's more, but it's really, really exciting. Mm-hmm. The other side of it too, though, is I'm a big believer, and we've been really vocal about this, is I believe you're going to see this separation of the market between the companies that actually fully embrace technology and those that say, we're going to just keep on keeping on. The market's going to come back. Our share price will go up. We'll raise money and keep drilling. Mm-hmm. Not to say that won't happen, but if you think of the market like the auto market and look at the market cap of Tesla and the multiple it has versus a Ford or anything else. If you give them each $10 billion of revenue, Tesla's going to be 10 times the share price. And it's because Tesla has been able to bring in a tech multiple, and it has lots of other things it's doing. And I think there's a massive opportunity within our market or within the industry to embrace technology in a way that allows the investing public to say, I've never really known much about this sector. I've kind of stayed from it. Are you digging holes in the ground to get metals out or what? But now that you're using artificial intelligence and things like that, that's enough for me to take another look at it. And I do think you're going to start to see a real separation between the companies that embrace artificial intelligence and new technologies and those that are really just waiting for the commodity price to give them a market where they can kind of get back to work.
Give me a couple of other examples as how technology can be used, even from a marketing perspective, because as you said, we're kind of in a sector, it's almost a little bit more old school. It's more difficult to get those flashy Bitcoin investors to come over the side. Is there a way to open up tech to digitize mining a little bit, be it 3D glasses and mine tours? I don't know. I'm just wondering how you're going about getting those new eyeballs.
It's a timely question. I walked over here from a 2-hour meeting we just had with our 3D team trying to solve that exact problem. Wow. So at VRIFY, we've spent 6 years building a visualization platform for the sector. So now that this work that we're doing in artificial intelligence to help build predictive models on where mineralization might occur to help you hone in on where to drill. We're plugging that immediately back into our visualization platform. Mm-hmm. And the problem we're trying to solve is essentially, if you think of the exploration side of the industry, it's essentially a treasure hunt. That's all it really is.
Pretty much.
It's kind of like we're kind of using clues to kind of guide us to something. And if we find it, everyone's going to be rewarded. It's actually not that different than a video game. And so the challenge I gave to our team today is like, how do we recreate all of this instead of like trying to take these very technical geological models and present them in a way that the whole world can understand, right, which I think I've kind of learned is almost an impossible task.
Yeah.
Can we recreate this in a way that and the average investor says, I don't fully understand the technical, geological, geophysical details of everything, right, but I'm really excited for you to go drill that thing.
So a digitized 43101, you can have something where you can actually visualize
totally
what the opportunity is.
Yeah, and it's to be honest, like the idea is that we're starting to work through with some of our initial clients and doing it, and
right,
that the team is coming up with is it's really exciting. And I spent a lot of the last 5 years with tech investors running a technology, even though we service mining, it's a technology company. Mm-hmm. And the one thing I will say is they are fascinated by our sector in that sort of you have an idea, go stake some ground, but then you're public. Like in the tech sector, you're going public is like you get to 100 million in revenue, and then eventually you've earned the right to go public. We like set up a website, an email address, and a public listing all on the same day. Mm. There's a whole world that's fascinated by our sector. The fact that we're public early, the kind of the incredible outsized returns if it's done right. I think what we need to do is just find a way to get them excited about it. And I think personally, this sort of using artificial intelligence in a way and presenting it back in a way that makes sense to them is going to open up a massive pool of capital for our sector. And if that's happening at the same time, you're watching commodity prices hit all-time high.
Could go.
There is no better environment. And that's kind of why to the early part of this, it's why I think mining and mineral exploration are kind of two different, like the catalysts that are going to lead to those industries changing, really appreciating in value is somewhat different and the same.
Right. Talk to me a little bit about M&A in the environment right now. Last year we saw Newmont, obviously we'll go and purchase a couple of things. There's been a little bit of activity. Do you think with the cost of capital being so high that you're going to see some of these big guys come and suck up the juniors?
I think what you're going to see is if the producers, and typically they do, their share prices and their multiples are the leaders and the juniors lag, they're going to play that arbitrage because it's going to be a lot cheaper for them to go buy a junior than it is for them to do it themselves. And if their cost of capital, if the majors or the acquirers in that scenario, if their cost of capital has gone down because their share price has gone up and they can use their shares to buy these companies, I think you'll see it all day. I think that window is starting to happen, in which case, like there are not that many really attractive assets out there.
Right.
So I think what you probably have is a bunch of majors kind of waiting for sort of if their share price starts to outperform that juniors, and they've all sitting on their analysis watching it. If that window opens, I think you'll see them jump on it.
Yeah, there's quite a few people looking at it right now, I'm sure.
I'm sure there's a whole lot of people looking at it right now.
Yeah. Talk to me a little bit about your outlook for 2024. I mean, again, you're in the environment where you're talking to these juniors every day and you're talking to the miners. So how do you see this going? I mean, we got an election coming up in the United States and 70% of the countries around the world, actually, and all-time highs on gold prices. Middle East problems. Where are we at?
Yeah, I don't know. It's you watch whatever your news source is. Right. I think it's easy to focus on all of this sensationalism around all the things that are going wrong. I think 2024 is going to be awesome.
Yeah.
I think it's a really exciting year. There's going to be all kinds of things that go on in the world. If we think of it just from within the sector, I think there's never been a more exciting time when you've got bottom basement equity prices and skyrocketing commodity prices. So I think that's really exciting. I actually didn't know 70% of countries in the world had elections.
70% of the population. Wild.
Yeah, I think the hard part with that, Canada, US are all the same, is it's the hard part to digest as the average person is that you see so much policy made and decisions being made on the fact that there's an upcoming, I'd like to think it'd be really nice if we could be on that and start making long-term decisions as societies and so on. But going back to your question, I think 2024 for. If looking back, and so much of my own life and those of us in the sector is affected by the state of kind of the industry at any given time.
Right.
Most excited I've been in a long time. And that's because I think technology is going to unlock all kinds of really cool things. Totally. We don't even know what those things are. And at the same time, like our industry, which has not had an easy couple of years, as you know, is moving into a really exciting place.
Yeah, and even walking around PDAC a couple of months ago, it was interesting because we had all-time highs then, and people were walking around as though it wasn't really happening. It was almost disbelief. It's like, what's going to happen next? It's kind of the same right now.
Totally. It's PDAC's always a surreal experience because you've got like 500 companies all jammed into a room together, and it's sort of
always fun, let me tell you.
Yeah, exactly.
All right, Steve de Jong coming on with CEO of VRIFY. Hey, thank you for coming today. I appreciate your time.
Yeah, thanks so much for having me.
That was a good macro outlook. I'm Jeremy Szafron for all of us here at Kitco. Thanks for joining. Don't forget to subscribe and to like our video, and we'll see you next time.